Good morning, everybody. Hope you guys are doing well. So we got news later, so that could cause an issue. Could make things slow, or it could make AM session end up being a manipulative portion of the daily range. We'll see what happens. Yeah, hopefully you guys have had a good week so far. Yeah, what's up, Byron? So, take a look at the higher time frame on the yields. We can see that it's still respecting that weekly fair value gap we've been talking about. This low to that high. Well, we could use this one. This low to that high is being treated as a BPR. We haven't came back up to the middle portion at all, right? From this low to that high. We also haven't even really, I don't even know if we actually, yeah, we didn't even touch this weekly fair value gap here yet. It kind of failed to do so, but it tapped into this one, right? So there's an SMT there with this fair value gap, failed delivery on this 30 year, but the 5 and 10 year have both basically tapped into it. So we're definitely going to keep that in mind. We got relative equal lows, right? So, and then beyond that 20th day, right, from the start of the October month, or September, where the new quarter started, we could see that there was a shift, right? So this was the shift, and so we may see that carry on and continue. That would be applying heaviness to the DXY, and then we should see something like this happen in the bonds, rallying up the bonds. This fair value gap we watched, it's also a suspension block for those that have been paying attention to things ICT has been talking about lately. And you could clearly see the suspension block or a fair value gap, right? It's kind of very similar, just incorporates two volume imbalances above and below. And you just basically take that whole range, and that's pretty much, at least from what he's taught so far, publicly, right? So yeah, nonetheless, that's a pretty decent support level. We got the weekly bullish order block, prices tapped into it, right? We got a failure swing here. Right, so run on stops here. Just checking out if there's SMT. There's not. Yeah, so no SMT. But there's this weekly bullish order block and the fair value gap. So it's a high probability area to hold this high, the created order block, down to the low. It's a BPR, 50% level. Shouldn't be traded into. We've really respected the upper portion of this range from this high to that low. So we could see this happening. So we got a run on stops. We got another area and price to watch here. Okay. So overlapping that, trading back into it, we would then have a breaker, a failure swing, a reaction rooted in this weekly bullish order block. Prices structurally still going to the buy side. Only way I would look for this to be bearish is if we break down below this low. Okay. Other than that, it should be allowed to continue to go higher, right? If that's the case, that is going to apply downside interest for the DXY, buy side interest for the indices, foreign currencies, commodities, so on and so forth. Right, so with that being said, we'll move on to DXY. So we can see DXY has ran up. We've taken out a 20-day high here, 40-day high here. Push that over to the 60-day. 60-day high is right in here. So this fair value gap, maybe pretty important. We'll see. This should be able to act as a BPR. If we see the overall structure here in the DXY, we came from an SMT at the lows with GU, basically creating that failure swing. And it's kind of resulted in, you know, a slight retracement here. Go to the weekly. We could see how we're kind of just still stuck, still kind of uncertain what it's trying to do. Go to the monthly chart. Lots of overlapping price delivery in here, so it's low probability for the currencies. 50% of the order block here bullish, so preferably we stay above that. We got this wick here overlap with this big candle. Mid portion of that should be able to stay above. Should be able to act as a small BPR in there. And prices now, you know, kind of just ran the highs up here. SMT, not only SMT between those two, but SMT with the lows here. If this is creating lower lows, these should be making higher highs. Right? It shouldn't be failure swing, right? But there is a failure swing, and what is that translated to? It's translated to DXY reversing bullish, and these somewhat stalling out, reversing bearish. Still inside this high to that low, the breaker, right? Run on stops, shift. Price is still inside that. This is why I've been continuing to push this higher, wanting to see reasons to go higher. Unless, of course, it violates this, then we can, you know, we could look to try to target some deeper levels. We got the relative equal lows here, so if we do break down, obviously we'll look to target that on the monthly chart. On the weekly chart, we have this weekly low, this weekly low, and we also got all these gaps in here as well, if it does want to target that. But yeah, we'll see. I'm not really too certain with what's going to happen with the currencies, but it does look like, you know, we do have a chance for this to try to reject if it's going to support what the bonds and yields are doing. If this continues and we don't stay in a range or reverse, we should be able to see continued downside DXY at some point, right? The weekly chart looks a little bit more overall clear in terms of the fact that we're still bearish, unless of course we were to get up here and break this high. Right, and then again on the weekly chart, that'd be up here, violating this wick, the quadrants, closing above them, using them as support, not really rejecting at all, breaking through the 50% of the wick here. That's all indication that we're probably going to start leaning towards price trying to now turn around and more long-term go bullish. That would have a downside effect on this. So if that happens on DXY, we were to break down below this, and we were to see the bonds drop and the yields rally, that would be the full suite of confirmation for the narrative to change overall fundamentally. So yeah, unless that happens, we're not going to change our opinion. And then we of course use the 3 PDA rule for those of you that are here all the time, and you start to get some serious levels of clarity, and you know, clarity as far as where it's going to go. And if things are conflicted, obviously it gives you clarity for the condition, whether we're in something that's worthwhile or not. Right? So hopefully that makes sense. If you're new, there might be some stuff that you're not understanding. That's totally fine. Again, we do this every single week, especially on Sunday, and you kind of get an overview of what the process is. So eventually things will make sense. You just got to keep showing up. Right? I do think that we should be able to see some interesting price delivery, to say the least. Today up to Friday should be pretty decent for volatility. NFP also moved again down to here. Not sure how long they're going to keep pushing this out. Like, it's kind of ridiculous, but it is what it is. So yeah, we'll see what happens with DXY on the 1 hour. Right, we see that we may start dropping a little bit. I could say that if this high to this low, 50% gets closed below, that sets the stage for us to then start to target a little bit further sell side. Because this low took this low, if it was to try to get down into that level, because business has already been completed down there, as in the stop hunt already took place, it's not a failure swing below this low or above this low. That is a high resistance potential signature. Okay, when there's a failure swing, right? Like if this failed and we rallied, when it gets down there again, it's most likely going to be a low resistance run. Simply off the basis that, you know, price didn't fulfill the stops, so it has stops to take again, right? So that's something you can add to your list of identifiers for high resistance and low resistance, right? If we're bearish and we're going against that, you should expect it's going to be high resistance just by default. Sometimes obviously you could still get low resistance depending on what's happening, but by default, if we're going counter trend, you should think high resistance. You know, with the trend on the weekly, monthly, daily chart, you know, you could reasonably frame out low resistance, right? So just keep that in mind as well. And then of course, ahead of a news event like FOMC, NFP on Monday or Friday, depending on what's happening, if correlation's cracked, or if we're day before, day of, day after a holiday, if we're in the summer months, right, there's a likelihood of high resistance. So these are just a small list of things, the non-exhaustive list, right? But yeah, so again, looking at this, we'll see what it wants to do here. We want to see if this order block is going to hold here on the daily. We'll see if this order block can hold on the weekly. If it breaks below the midpoint of that and targets this low, that'll set the stage for us to slide down here pretty simply. And because this has a failure swing, it did not break this low. When it gets down there, if it does choose to do so, it's going to be in a low resistance fashion, and it should be able to smash through it and then get us down to this monthly fair value gap. Okay, but we'll see, right? Otherwise, we're going to continue to go higher because structure hasn't changed overall. It's just been sideways. If you go to the monthly chart, if this was the 5-minute chart, you would not be thinking, oh, it's bearish. You may expect a retracement potentially, which is what we're kind of seeing here. But overall, long term, you know, it needs to do a lot more than this to prove that it's going to be bearish, at least for me. Right. So moving on to here. So with that being said, we will make sure. That being said, so if everything stays equal and it stays the same, right, and nothing really changes, we're going to continue to try to see the indices go higher, okay? Because there's no reason for us not to, right? And until a reason is presented that gets us away from that perspective, we're going to continue to hold on to the buy side. Like this here, right? We got that run on stops. If it tries to bust through that low, it should be able to do it in a high resistance fashion. If it was to fail, right, like this, you know, it'd be a lot more likely that it's going to be low resistance. If we do see it start to go higher, I mean, we got this here too, right? The run on stops. So it may cause that to be potentially a little bit slower delivery than, you know, we would normally like with the failure swing. But yeah, we'll see what happens. We're inside this here. All right, again, we do have the lows. We got to keep tabs on it, obviously. Low there. Low there. 4 hour. So yeah, we do got an 8 hour fair value gap here. Something you got to be aware of as well is this order block here. Alright, so we'll see what happens with this. So we'll see what happens with this delivery in here. If we can invert this fair value gap, that'd be pretty nice. Couple that with obviously the run lower, right? You saw that I just had a low resistance run labeled there. You see the failure. You see the response. That's the type of stuff that I'm talking about. Right? So we're kind of sideways inside this range. So, you know, if we go to the daily, we could see it sideways. So yeah, we'll see what it wants to do with that. So these are some of the important levels that I'm watching here. If we are going to go lower, I'd prefer it not fill in the rest of the fair value gap. Again, we got this fair value gap here too on the 1 hour, 4 hour. And then we got this previous day's high, or previous week's high. In between these gray areas, those are all new weeks. So 1 week, 2 week, 3 weeks, so on and so forth. So yeah, we'll see what this results in. Again, we do got this FEG up here. So if it wants to continue and try to get up there, attacking the 60-day high up here, we'll have to monitor what that's going to do to the other assets, because that doesn't agree overall with what the bonds and yields are doing. Unless, of course, it starts to bottom out here. We are just kind of dancing around this weekly fair value gap, and we're kind of sideways. Overall, right, this does look like we're starting our way headed towards the downside. Equal lows here. Longer term, we got equal lows down here. Failure swing, unfinished business. And I mean, this looks pretty incredible too. Really massive liquidity to the downside. So, you know, we'll see if that continues. And if that does continue, remember, we came off of rate cuts. Rate cuts are coming this month as well, if I'm not mistaken. Federal fund rate, yep. I heard that it's going to be a very big cut too. So rate cuts equal higher indices, lower dollar. So we'll see if that's something that'll continue. That's what I want. That's what I'm going to anticipate. And we anticipated that months in advance, about 2 months in advance, when we started hearing about the rate cut. And isn't it ironic that we were correct about what was going to be the response? You know, it pays to be around people that know what they're talking about. Yeah, everybody that's hopped on, welcome. Appreciate you hopping on. Hopefully you guys get some value today. Hopefully the market can offer us something that's reasonable. Well, we're just going to have to wait and find out. Because there's no news, we're going to wait till 6:30 comes in. And that'll become our potential manipulation. Failure swing there. So I guess there is like a slight SMT in there. Not sure how impactful that's going to be. We are inside this down candle here. Notice a 50% level. It's fairly interesting observation there. 50% level is absolutely being used inside this bullish order block. But mind you, we're inside this order block plus this fair value gap and this bearish order block. So we're kind of trapped, right? If you go from this low that took sell side, you measure that up, there's good equilibrium. So a premium and discount for our range currently overall is here. So yeah, we'll see how these levels want to be respected or not. I don't think bearishness right now, unless we lose this low. I'm going to expect and anticipate that this is going to hold. DXY, as a result of that, is going to have to drop. We'll see if correlation is going to be something useful today. It might not be. We are in a time that is kind of strange with the shutdown and the way that certain institutions are behaving, like the one that deals with FOMC and whatever, NFP. They're refusing to put out the data. So lots of, mess is happening right now. So you got to be cautious. And we're going to wait for macros. We're not taking trades outside of macros. We're going to wait for macros. We're going to wait for, one of the 4 models that we operate with here on this channel. We're going to keep our eyes on market maker models. Think of Power 3, 2022 model breakers, fair value gaps, right? Inversions, so on and so forth. And we'll see what's available, and then we'll look to execute on whatever's available. My favorite model is the breaker within market maker models. Secondary is a 2022 model. Third, inversion fair value gap opportunities. And then every continuation that could possibly happen within the realm of those, while we understand the Power 3 and market maker model ideas. So those are kind of my perspectives. We see this failure swing here. Shift. Let's pull up London's high is right here. So we're attacking London's high. We're down below the open price, right? Or for the day, right? 9 p.m. Pacific Standard Time for me. Zoom in a little bit. Let's check these lows here. So you see that SMT there? It's SMT at these lows. Stop hunt right here. So stops were taken. Left relative equal lows though, so. But this is SMT here. All right, so we're gonna see what price is gonna wanna do with this. So getting above this high, we may create a bullish breaker. Right, high, low, take stops, higher high. So this is gonna hold and wanna go higher. We should be able to see this somewhat get respected. We're too early in the session though. 6:30, I don't take trades right at 6:30. I am going to monitor this though as a breaker, see if that can hold us. Yeah, like I said, the main perspective, higher time frame wise, is bullish. Okay, if you look at this higher time frame, this does not scream bearishness to us, unless it was to start violating the lows. Right? We do have SMT here that led to this. DXY is rallying. It does seem like it's starting to give a rejection a little bit though. This weekly chart looks like we're just returning above some of these highs, hitting this wick off the heels of the SMT that led to the retracement. But we're going to watch these quadrants. If it fails to get up to the 50% of the wick and it starts to really displace, breaks through the middle portion of this, that's when we can be confident that, you know, it's most likely not going to be stuck around for much longer in that range. Right, we see the Dow, the S&P have this gap right here. See if the Dow can hold that. Relative equal highs are up here. The Dow's a mess, absolute mess. So yeah, we will see. Let me check the chat real quick. All right. See, like I said, this breaker here, I want to watch and see if that's going to be able to hold. Looks like it will. If you go down to the lower time frame, there's a large breaker, a larger one, overlapped with this high to low. Breaking above that high, it will be a secondary breaker, more close to price. We do have a regular trading hours gap now. You see that here? So there is a gap below us. Right, but I don't believe that it's going to go lower, like I said. And there's the move. There's one move. Pushing to the buy side. Right. Just as we thought it would do. Right? We'll see how it's going to roll into the remainder of the session here. But so far, hopefully it's made sense why I wanted to see price go higher, why I wasn't thinking short. And hopefully it's edifying to see it happen right in front of your eyes again every week. Right, let alone today. See these down candles here? This is a 1 hour block of candles here. So now we've gotten above this. So 1, 2 on the 2 hour chart. It's probably an order block there. Right there. Okay, so see again, like I said, this right here was potentially a move. Right? I personally wouldn't have taken it because my rules are my rules. I don't execute right at the open. It is what it is. But this is right at the open price. Looks like power 3 is going to unfold. We do got this 8 hour order block. So we'll see what the reaction will be. But unless we're proven otherwise, all of this stop hunt, SMT to shift above this high is setting us up to go further into the buy side because the higher time frame narrative, not bias, narrative, because bias and narrative are different. The narrative, the underlying storyline on the higher time frame is bullish still. Bias can sometimes vary, being consolidation. It can retrace within that larger narrative. So I personally like to separate the meaning of bias and narrative, and I think it's justifiable and helpful because then it keeps you in line with the higher time frame. You won't just flip-flop because it goes against you for a little bit. You'll remember that longer term, higher time frame wise, we're doing one thing, and if something's happening on the daily or the lower time frame where it's going against that, you could still trust that that narrative you painted is going to continue until something changes dramatically. Yeah, what a move that is, huh? DXY is definitely not really doing anything. The Dow looks like a mess. Nasdaq looks like it's the strength holder. Right. Got SMT here at these lows. So yeah, I guess the failure swing here versus this looks like it's going to be pretty significant. So yeah, let's see how the behavior is in this. Because this is the breaker here, let's get some projections. See what we can align. Pretty interesting how this high appears pretty damn close to 3.5 standard deviations. So yeah, we'll see what happens. If it gets back down below this 8-hour fair value gap, maybe even when if it breaks down below this, obviously that would change our opinion. We'd start to be flexible, targeting sell side. If that does not happen, I don't expect that to really even attempt to get down there. Spent a lot of time below the open price, so consolidation, manipulation, SMT, distribution is happening now. So we'll see if that can be something that happens throughout the session. We do have this low to that high, right? So this is technically a breaker itself. So we'll see if that's going to hold. We also have the order block, like I said. Order blocks are balanced price ranges, so it shouldn't, if it's going to be respected and, you know, prove to displace, we need that reaction to happen while taking the low here, right? If those things happen, that allows us to be flexible and, you know, kind of adjust our opinion. But I'm going to favor what I've been mentioning, buy side, right? Until proven otherwise, because that's just the way it is. You know, you always have to have an ability to allow yourself to be flexible if needed, right? But you always want to be on one side of the market, favor one side, because if not, you're going to have analysis paralysis, you're going to flip-flop back and forth, and it's just going to be a mess, and you don't want to deal with that. So yeah, thus far, it's absolutely done exactly what we painted it to do. Run to the buy side off that breaker. So that was nice. This is the S&P down here. That's what this is. It's not some indicator, just like monitoring the other assets. But yeah, it's on a tear, right? Notice how the 50% of this fair value gap is acting pretty nicely as support. We got the currencies now picking up. Trendline liquidity has been neutralized down in here. So for the currency traders, again, I'd be very cautious with this because we are pretty much in a nasty range. I'd watch for this high to be taken once that high's taken, or even this one. If it could really displace, that may be something worthwhile to watch these equal highs up here. And then just inside that, you would have to find your model, whatever that is. And it's supported by this monthly breaker bullish. And the weekly bullish order block too. So let's see what happens here. Again, if it was to violate this low, this would then turn to potential market maker sell model. But for now, again, I'm looking for this to deliver with market maker buy model characteristics within the bullish trend. And it looks like that's going to serve us well, so we'll see. See what happens. Patient. We're not going to do anything chaotic. Just take your time. I do want to remind you guys, if you get value from the content I provide, if you could do me a favor and like the video, subscribe to the channel. It makes sure that YouTube pushes this out so people get to see the video and know that we're live, so they can come and learn. Right? I appreciate you guys in advance. But yeah, so you know, I do feel like we'll stay above this 50% level here. I don't think it's gonna have to go down. It might, right? It might go down to sweep these early buyers out and maybe trap people that are up here trying to pick a top. But yeah, this 8-hour order block not being respected, price getting through that, that's gonna just further justify the fact that price is gonna continue to go higher. If you look at the week so far, it's just been kind of seek and destroy. So, but yeah, like I said, this is looking nice. Yeah, hopefully everything's made sense so far. Yeah, Byron, absolute patience. It's one of our specialties, right? Never in a rush. So we're getting that response off this. This is an opposing PD array to price going to the buy side. So anytime a higher time frame PD array is met, you can expect at least some form of a retracement to happen. Again, we're going to monitor how this behavior is going to be. Is it going to slide on through this? Because that just further supports the fact that we'll probably get up here today. Again, if not, if it breaks this low, overlaps this FVG over here, right? If this gets violated and inverted, again, those are signals for you to be like, all right, let me switch. Let me start attacking sell side. It'll probably be high resistance though, given this is a run on stops. It's not a failure swing. If it was a failure swing, the delivery would be a whole lot, more vicious to break through that low. It may still slide down if it wants to get down there, but the common thing that happens when there's a run on stops already and then we head back down there, you just want to by default think, okay, it's going to be a little bit more high resistance. So DXY is pushing here. DXY was going to go higher. This should act as a balanced price range here, right? It should not get back below it, right? Because we got stop hunt, shift in market structure above this high, return to a inversion. That should send it higher if that's going to turn around and be a bottom. If not, right, and it overlaps it, you should look at it as an inversion. So you could kind of see how this and understanding balanced price ranges can help you be pretty flexible, reliably flexible, and as long as you can make sense of it on the higher time frame, it becomes pretty easy. So again, so far we have accumulation, right, manipulation. We do it. This is pretty relatively equal. So again, if it was to break down below this low, my attention would go directly to this low. So that'll be my contingency plan. If we were to get back above this fair value gap, that'd potentially be somewhere that I'd be interested in looking for something. See if my model or one of the models can perform in there on the seconds chart. And if we go to the 5 minute, try to get a view of what it's trying to reach for here. So we got this fair value gap. Yeah, let's see what happens in here. Again, we got this 8 hour here, so it should hold. You know, I'm going to anticipate that it is going to hold because we're bullish and nothing's changed. I want to see if we can get above this here. If it rejects this and displaces, again, we're going to see how it behaves down in here. And again, if we were to break through these levels, pretty much get down below this fair value gap, I don't think we would really have to see a breakdown below this. We would then start to believe that we could target the sell side. But unless that happens, we stick to what we're talking about, going higher. There's that displacement above it. I don't like DXY, what it's doing here. So a pretty sizable crack in correlation across the board. So that's low probability, just automatically when you see this. Does that mean that things won't deliver? Not always. But it is automatically putting you in a place where you got to think about this is higher risk. So the things that I just mentioned force you, or should force you should force yourself to lower your risk. Right? If you were going to do 1%, cut it to, at least, 0.75%. Cut it by 25 or 0.25%. Right? Or half. Just depends on you. But that's the mindset that you want to consider. There's SMT at the lows there. This high to that low. We may see that continue to act as a order block. Okay. See how we're respecting the upper portion of that 8 hour? All right, notice how it got above this. I said if it gets above that, there may be something there. So there's a secondary opportunity that I pointed you to. I don't tell you buy here, sell here, because you need to work for it. But I literally gave two opportunities, two levels in price. I should move price to the buy side. I favored buy side, right? For those that always try to demand me to give them signals and not force you to learn. If you're paying attention and you show up all the time, these are things that you could reasonably have made an argument about. And they ran the 20 to 30 points well above 20 to 30 points that we always look to target as a default. There's 20 points right there. Right. 30-second chart, you can see how beautiful that is. When price overlaps fair value gaps like this, it creates balanced price ranges. So that's why, if you're bullish, and it was to get above there, why I said that, it's because it creates balanced price ranges. One thing I just don't like is a DXY here. And I'm not necessarily a big fan of this massive crack and correlation inside of a range-bound environment. So, just some of my thoughts, right? Got this large wick here. It's going to be a discount array. So got this order block here. It's going to be a discount array. We're kind of in a premium, somewhat. well, not necessarily. From this high to that low, grade the price swing. We're right above equilibrium. So this move, the drop lower here, right? Equilibrium was, it's right there. So right at the low of that order block here on the 8 hour, that's equilibrium for the range currently. I'm gonna keep this graded view here. Where the hell did it go? So what this fib here is doing, it's called grading a price swing. So we got 50%, 25%. You could see what the reactions are from these levels. 50%, 75%. This is an accumulation area over here to the left. Consolidation, accumulation, reaccumulation, smart money reversal, very sloppy, but nonetheless. So within this here, right, this fair value gap should act as a distribution. If this is going to deliver a market maker buy model, right, if we get up into here and we're looking for the high to be targeted, we should be able to get some very, very strong dynamic, similar price delivery to what we've seen up here in this level. So this is why we don't care if we miss a move, because you can wait, use the data, use the information, and then see if you can't position at a later phase of the overall delivery. So yeah, this here, that's something to think about. Morning, Matthew. Morning, Mike. Morning, everyone. Today's been pretty incredible already. Called out this buy here, called out this buy here. Now we're looking to see how this behaves in here. DXY is rallying up, is a little bit right. We have kind of moved, so I wouldn't be too surprised if there is going to be some kind of retracement. Preferably though, if we're going to be heavily bullish, I don't want to see us break this. We really don't want to see it get down below this fair value gap, because if that happens, we then target our contingency target, which would be down here. Yeah, hopefully we could stay above this equilibrium here. I really just don't like the DXY here. Remember how this happened on the higher time frame? Right, that same thing that we're seeing on that lower time frame, right here. This is a 5-minute version of this, what we painted on DXY to get us up to the buy side. An overlapping FEG, balanced price range, SMT, and it rallied up. Right, this one did something similar, maybe minus the SMT. Yeah, just minus the SMT. So regular trading hours gap. So yeah, remember what I said about this order block. So yeah, how's everything been this morning? Did everything make sense, everyone? I know some of you guys hopped on a little bit late, but everything's kind of, just same old, same exact stuff we talk about regularly. Has everything made sense? Let me know in the chat. Again, if you guys have gotten value from the content and you've learned a lot from this channel, continue to learn a lot, don't forget to like the video. It's free, obviously, and I come out here and do this for free. And I give you valuable information. And it's making some real savages, right? All thanks, of course, to ICT himself. But yeah, lots of people that are on social media that are a bunch of idiots. So, and although my channel's small, I do appreciate you guys hopping on and spending time with me regularly. You guys quickly find out that what we do here is well above average. And a lot of you guys are getting to that point too. So it's amazing to see. So yeah, don't forget to like the video, subscribe to the channel. Matthew said, yeah, tight range. NQ seems to be, yeah, Nasdaq is definitely the star because it has the failure swing, right? In comparison to the run-on stops here, run-on stops down here. The Dow is definitely a bit suspect, so I'm not necessarily sure how that's going to affect things. Nasdaq is absolutely on a tear, right? We're now at the open price of that order block. So we'll see what happens. DXY is declining here. See if we can't get price to run. We are inside of a range, right? It's still range bound, gradually grinding its way to the buy side, but we'll see how it wants to deliver with this. I'm not sure what the hell that is. What is that? Oh, possible second stage distribution. Yeah, if you took my advice here as well, so we had 1, 2, 3 opportunities that I just literally laid in your hands that got well over the 20 to 30 point average that we aim for. So anybody that says I don't give signals, they're just lazy and don't pay attention. Okay, because I do the same thing all the time. It's just, people want me to trade for them essentially. And I mean, it's pretty hilarious. Maybe there's people that are interested in doing that. I'm not. I want you to be able to impact people in your life, impact yourself, your family. If it's solely based on what I'm saying, and if I'm not live or something, you can't trade because you're trying to follow everything I do. What if something tragically happens to me? God forbid. What would that make you do? You just jump to the next person that's trying to give signals, and you'd never be able to be successful. That's not at all what my goal is, being public. I'm trying to help and pass the blessing along. And it's not overly complex, just takes time. And you got to be dedicated and actually love this industry. And if that is you, you're going to be pleasantly surprised when you're in a community like this. So yeah, like I always say and do, I always practice what I preach. Okay? 12-point stop, right below this high to that low, equilibrium, the order block 50% level. 36 points for literally from the order block. Once it, I mean, you see how the bodies are so perfectly aligned with the open here. The wick's going below it, and it's unwilling to do much below that. And it's closing multiple candles above it perfectly. That is a very strong signature that that specific order block is going to be pretty impactful. It's going to hold. When you have a narrative overall that has a reason to go higher, I mean, it's literally a loaded deal. You know, I don't know how much more effective to put that. But that's one of, like, when you're watching some of the overall PD array relationships and how price operates with it, like whichever one you're trying to study, you'll be pleasantly surprised that there's a lot of these little signatures that happen that are pretty fascinating, very repetitive, and eventually you see that it's, you know, undeniable that eventually you'll be able to trust what it is that you're trying to do, you know, without emotion. You know, but that, of course, it takes time. It's just like a relationship, right? Like a love relationship. You know what I mean? It takes time to build the trust. It takes time to build that relationship and nurture it and whatnot. It's the same thing with your models, right? It's the same thing with all the stuff that you're trying to do in this industry, because you want to be able to trust something, right? Well, how do you build trust in general? In this case, it's build trust with yourself and your own skill set. But, you know, outside of that, how do you build trust with somebody? It takes time. You know what I mean? It takes a lot of time, and you have to do the right things. You have to be around the right influences. You know, you can't be around a bunch of idiots. You can't be a person that wants to just take signals. You know, like, you have to be wanting to fully get what's going on. Right? And look at that. Bigger run. Yeah, I mean, the amount of time, those of you in my private group, let me tell everyone if I'm lying. The amount of times that this has happened in the last freaking like month alone, where we get in, I just stick to the rules that I, you know, try to push upon you guys. How much has this happened where price runs hundreds of points from the entry that we grab or call out? I mean, it's just insane. Mike, you know what the, you freaking know what's been going on. Byron too, if you're still here. Oh man, we got into a big conversation about this. But man, you know, 20 to 30 points, do whatever you need. Right, it'll get you wherever you're trying to go. But man, the amount of money that's been left on the table is absolutely ridiculous. But you know, rules are rules. You know, eventually you can adjust the rules. But I mean, it's just been absolutely insane this year. But yeah, I hope that I hope all this stuff makes sense. I know there's probably some people that are new to the page, to the channel. I mean, if this is your first call with me, I mean, it's a pretty good testament to what's done regularly. You know, so expectations are definitely set properly on this video. If it's your first time being here, I know there's maybe like, you know, 2 or 3 people that are new. But man, I mean, I just called 1, 2, 3 opportunities for you guys. And aside from the fact that opportunities were called, which, you know, they always are, right? They're always pointed to. It's up to you to find your model and execute. Wait a minute. Let me go. Hold up. So let me go check something real quick. Totally forgot. Where did it go? Sorry, I just totally got blindsided right now. Almost forgot to check something in my email. Had to make sure, that the withdraw hit. Okay. Totally almost forgot. Just hit me. Yeah, what was I saying? Sorry about that. It's been a couple days and I submitted a withdrawal. I didn't get nothing back. So, had to double check. Yeah, what was I saying a second ago? Just totally lost my train of thought with that. No buttons for me yet. Let's just see what happens. Yeah, don't worry. We're just getting into the silver bullet. So I was about to say something before I got distracted with whether my withdrawal hit or not. If you guys remember what I was mentioning, let me know. You holding your trades? Oh yeah. Eventually you can, you'll adjust your your rules, but all this stuff that you guys see regularly with me calling out these massive runs, these consistent, continuous, almost every single day, higher time frame moves that run hundreds of points, that offer you well above the minimum, 20 to 30, that comes from what we do every Sunday. You know what I mean? It comes from the process that I literally share on Sunday. And then, of course, some of the more advanced details that I talk about here and there as well. It's not me looking at one asset. It's me having a basket of things that I've mastered that, I try to get you guys to master. Fundamentals, technicals, PD array relationships, timing, macros, right? Like, look at what time I entered this trade. 6:53. It's within a macro, right? If you come over here, go look at, how this started, right? The start of it happened in a macro, right? From this macro to this macro, it delivered a pretty nice run. Today's clearly a large range, classic buy day. These are the types of days that you want to be able to engage, right? But these macro times, they're absolutely essential. Some people I've seen that have big followings say that there is no such thing as a macro. Someone says this that I really respect also, who has a massive following. What a stupid statement. I think it's just to start controversy. But what a dumb statement. What an idiotic thing to say when people like us can come out here and prove it. People like ICT, who literally introduced the concept, who this person learned from. Like, really, bro? Like, some of this crap is dumb because it's going to swerve people away. Like new students, it'll swerve them away from considering it because so-and-so said that macros don't exist. Well, if you're here with me, I show every single day that they do in fact exist and they do have a heavy, heavy impact. We've got some other things that we use for timing as well. But keep it simple, use a macro. You want to get in line with something that's going to move. The macros are literally times and price where it starts the power 3 for that hour, right? So the hourly power 3 begins at a start of a macro and ends towards the end of a macro, right? 9 o'clock, right? Or what is that? 7 o'clock a.m., right? 7:10, right? 7:10 goes up to 8:50 a.m. Pacific Standard Time. That is a whole power 3 within an hourly candle. So that's what these macros, people don't talk about this. I've talked about it a couple of times, well, a lot this last month. But the macros can be used within 1 hour power 3 identification. That can be used inside the bigger, larger power 3 idea. Right? So think about it from that perspective and things really, really start to open up. So I definitely encourage you guys to think about that. Power 3, market maker models, whatever model for entry you use, bias and narrative, risk management, mindset management, daily, weekly ranges, targeting with our liquidity mapping principles, balanced price ranges, what else? Intermarket relationships, understanding SMT, those are some of the key elements to what I do. People always ask me, what do you use? What's the most important? Okay, well, that little list I just gave you is absolutely, undeniably, it's not an exhaustive list, but it's undeniably the components that make me the trader that I am today. They are also the critical key components that I teach my students, the people that come to me for help. I push them into these things. And undeniably, over 200 plus students at this point, 70-ish% of them succeed because of these concepts. You can never guarantee success with everybody because, people don't listen, they don't follow the rules, they try to trade against what you're doing when you're hitting at, high 70 to 91% in front of everybody, which, it's contrarian mindset, which there's a way to make that profitable and successful too. You don't have to always trade with the trend, but yeah, it's, those are the critical elements. So if you're wondering and you're new and you're thinking like, okay, well, what should I focus on? Focus on 2022 model, okay? Get that baseline model so you have something to look for. Then everything outside of that goes back to the things that I just mentioned to you, right? And you want to press into those things. Those are literally the key components, the key recipes, a recipe for, in my opinion, a pretty fast, dynamic learning environment. Okay? Yeah, I didn't expect, Mike, that it was going to be so quick today, but hey, when it's quick, we called the narrative. We were correct. We called 3 opportunities. You could even add 4, right, within the second stage distribution. Right, I said that if it gets up here, it should be able to quickly get up here. I marked out 2 possible areas where highs would form, what the targets would be. Right, you guys saw me real time do all of this whole entire process, come to terms with bias in like less than 20 minutes, and then just continue to watch price open up and do exactly what we said it was going to do. So hopefully the process makes sense today. Today was one of those days, right? One of those days where it's just absolutely perfection. Nothing we said today didn't work. Every single element that I pointed out, from the fib levels to the bias to entry tactic, right? The different areas and price where entries were going to be offered. Every single element, right? Even this, right? The graded price swing, right? 25% down here offered a low. 50% offered another entry and a low. Yeah, 50% here, entry and a low. 2 actually in that area. Now we got 75%. Is that going to also offer something within this second stage distribution? We're a little bit outside the macro here, but this here may end up being the silver bullet. One thing you saw me do earlier was find the measuring gap, right? And you go like this. If this is your target up here, you measure that out. Okay, you get 50%, right? See, was that it? Yeah. Get the 50%. Find a fair value gap that's relatively close to the equilibrium. Drag that down because it's that one right here. You can pull up the fib. Whoops. You can pull up the fib, place at the top portion of it. Oh wait, whoops. It's not the full low. Whoops. All right, and then you can get some of the projections. You can kind of mess around with it too and see what can align? I think I'd rather use this actually, because this is what started that move. So, and then you can start to see like, okay, this projection from the low to the high that created the breaker, right? You look at those standard deviations. Then you can also use this. Let me actually move up a little bit. But yeah, and then you can just kind of see, okay, 50% is here. Is there a close standard deviation there? Is there another one above here? You know, where is it close? Right? And you can kind of get like a rough estimate as far as where things could go. And then, of course, like I said, if you want to keep it as easy as possible and kind of just disregard the whole idea of a measuring gap, that's one of those things that you don't need, right? There's a lot of stuff that you don't need. There's a lot of stuff that I don't use, right? And there's going to be a lot of stuff that you don't use, and you got to be okay with that, you know? But there's obviously going to be a lot that you do use. But things like measuring gaps, certain things like that, it's not life or death, right? Or success or failure because of a measuring gap, or some other, you know, smaller projection ideas. But it is good to have at least one, right? At least one thing for each topic you feel is important. I have a list of things that I feel are important, like categories of things that a lot of tactics fall into, a lot of the concepts fall into. I have that in my free Discord, and then I have it, of course, scattered all throughout my private mentorship or private apprenticeship community, because that's kind of like my trader development framework. And like I said, you know, high 70% of the students that come to me for help, those that listen, right, they absolutely get clarity. That's what I guarantee is clarity. I guarantee clarity can be achieved by watching my YouTube channel, you know, but even further, more insane clarity, obviously, when you could work with me one-on-one, you know, or even just simply be with me live every single day, because it bleeds off into you, you know. That's how people from my YouTube channel, like, I'm not sure if Tony's here today, but I have a student named Tony. I have a couple other students who just been absolutely crushing it, passing funded accounts just from the time that they started with me on YouTube. You know, let alone the ones that are with me in my private group. I have one student, one of my superstar students that I talk about all the time, Harley. He pops in and out here and there, but he's less than 21 years old, and this man made close to, I think he said like 30K in a month, and he's only been with me for like a year and some change. You know, he's only been trading for, I think, a little bit under 2 years. But so basically, I've had majority of his attention, and because of that, because he also has been turned into a ICT purist, and he employs the things we talk about, and he follows directions. I mean, I think $30,000 in a month is pretty damn insane for a 20-year-old, right? I think he's 19, actually. I don't even think he's 20. I could be wrong. Harley, if you watch this, I'm sorry. Correct me. But yeah, that's the type of stuff that really makes you think, you know. Coming from where I came from, just getting myself to be successful is probably a long shot, let alone be able to get multiple people an income stream that obviously isn't guaranteed, and I'm not a financial advisor, but it makes you really, I don't know, it makes you really think. Now, first of all, God's real. I mean, that's number one thing that it kind of proves, at least for me, and how I see it. But it shows you the power of this industry. Having the right information. There's lots of people that want to act like vipers, act like vampires, poison you, suck your blood out, suck the life out of you while they live their life on the backs of you. You know, this industry is full of those people. And that's one of the main reasons why I started a YouTube channel. Because it's pretty rough at first. You know, there's a lot of liars, people that don't know what the hell they were talking about, sold me a dream, made me super excited, and then crashed and burned the first year badly when I was just becoming a new father. Lost my job at that time, so I wasn't even working. And I was just putting all my eggs into this basket when I had no idea the things that I know nowadays. For one, about the concepts, what's possible, and then all the nasty, disgusting people that are in this industry that would be more than happy to see you become homeless, and destroy your entire financial life so they can go right on their private jet by selling you snake oil that they don't even personally use and can't come out and prove it live. Simply doing what we've done today. Market's going to go here. This is possibly a good entry. This is a good, flexible plan to adjust if it's wrong. Like, they can't even do that, let alone show an execution. Yet they're selling expensive things, for no reason. And people believe it because they'll, rent a Lambo or something. It's really sad, honestly, because once you get wisdom within this industry and you see what's possible and you start to know what's going on, like, you start to have a real appreciation for it. Like, you really start to love this industry. But then you see these nasty individuals that are just ready and willing to take your money and push you off a cliff. While they're sitting there with a parachute or just chilling at the top watching you fall, knowing that people are failing. I don't know how those type of people sleep at night. But, that's why I push so hard with what I do. That's why I'm very crystal clear with what I teach. That's why I offer one-on-one, opportunities. That's why I offer an apprenticeship where people could watch me every single day to get that extra help if the YouTube channel is not enough. Because I know these nasty individuals are here. And I'm trying to make students that can help me combat that BS. It's diluted by a bunch of idiots on social media. But this industry is so amazing, and I feel like, I've been blessed. So I want to pass that blessing along, but I also want to try to, build an army of people that can help me in that mission to kind of, save people from these idiots, and really put themselves in position. So that's why I have a YouTube channel, if anyone was wondering. I'm not here to be famous. It'd be great to have a bigger page with more people seeing the content. But, the goal is impact. So, yeah. Byron said shorts. I'm not necessarily sure. I mean, short term, yeah. Maybe for this retracement. I want to see what it's going to do here. We're inside the second stage distribution here, like I mentioned earlier. I would not personally want to short against that, because at any moment they could flip the switch and it could be dynamic to come and take out these equal highs up here, or the normal high. Oh yeah. Yeah, short term. I can say though that if price gets back down below some of these lower levels down here, we do have relative equal lows. Right, if we were to bust through this and get down into this again, I would then look at this as a market maker sell model, right? And then of course we would be able to use some of this accumulation portion down here as a distribution. I'd have to literally wait till the second stage distribution comes in, and that's going to require obviously us to really give up the ghost and break through all this. We also see that the 8-hour bearish order block has been very nicely traded through with little to no effort, low resistance fashion. So yeah, I think that should be able to continue. Okay, we got that fair value gap in there. Let me actually... So we got this fair value gap in here. If we drop down to the 1 minute, we got that fair value gap delivery. if we can get one of your models, the model, or one of the models that you like, if you can get this retracement to then start to present those rules within this framework to potentially get us to go a little bit higher. If DXY was also continue to drop at that time as well. We are inside of a premium relative to this high and low that we outlined earlier to grade the price swing. So this in here is at a premium relative to the current range that we're trading within. So because that is the case, you can still find opportunity in a premium. You could buy in a premium. But when you're buying in a premium and you're not below or close to equilibrium at a discount, when you're looking to buy overall, you got to cut your risk. It's another one of those rules, you know, for risk management, for active risk management and mitigation. You're going to want to definitely consider that. You got to know when to push, when not to push, when to risk normal, when to cut your risk. And this is one of those particular moments. Yeah, we got a stop hunt here, so run on stops. Okay, DXY is just building sentiment to the downside. Looks like it's really, really nicely leaving layered liquidity. Remember what I said about this overlapping fair value gap? I said it was going to potentially act as a BPR if it's going to go higher. Do you see how it does that? I mean, this is one of those very visually pleasing things to see. The overlapping FEG, right? When it drops down, takes stops, and then pushes through it again. I mean, this is just a very pleasing thing to see. Same with this, right? If it was going to go lower. If this is going to go lower, there's an overlap of fair value gaps here. So we should not break outside of that in a closing basis. It should be able to continue to drop if we're assuming that it's going to go lower. So same thing as we looked at here, but this is to the downside. I prefer to see this take place, like this hold in here, get us lower if we're going to look to continue to buy in the indices here. So yeah, get our attention. It's going to continue to be up here. Retracements, I'm not really too concerned. We got open price in here for the 7 o'clock hour. Oh, I guess it's right there, huh? Open, rally, decline. And now we're kind of seeing it still march to the buy side up there. DXY is moving lower. I want you guys to think about something in here, right? Look at what's happening, what I've just been talking to you about. Overlapping fair value gap, right, for the run on stops. Second stage distribution. We're in a premium, so you gotta be careful. Right? It may not. It may stall out. It may, play games. And then you got an order block here, right? So fair value gap in this down movement, right? The first one got overlapped. return into the fair value gap it's holding, breaks above this high here. This candle can be a potential execution. That could be a model all in itself. This little particular piece of the fractal here, right? Down movement, taking stops. 1, inversion, fair value gap that's overlapped. 2, breaking above the high that created the fair value gap that got overlapped. 3, order block, delivery above the order block. 4, execution. That's a particular model you can use. So there you go. Very easy laid out model. Right? It's a bit unorthodox, but nonetheless, that is something that happens over and over and over. Watch this replay again. Okay? At the 7:30 moment, right? On my chart, whatever. Right? I can tell you that what I just mentioned there is just as ruthless as the 2022 model. Yeah, that's a broke down FEG model. For those of you in my private group and on this YouTube channel that like that PD array. I know my brother likes that PD array. Or that little overall view. So that is an absolutely amazing model to use. Yeah, because we're in a premium here, it's a little sketchy, right? Because it could still look to retrace and still be valid. I mean, this here, how many points is that? It's already 20 points right there. You know, DXY is still falling. Look, overlapping fair value gap. Return into it. It's holding off. Obviously, you want to be correct on the narrative where it's headed. Every model you use, you want to make sure that you're on the right side of the market. If you're not, opening yourself up for it to be wrong because of the bias being wrong. But you could trade these types of things counter trend, but you have to know that that's what you're doing. You know, you can't just randomly take any opportunity you see without having a justification for the direction. So yeah, what in this, right, once it delivers above that and offers the opportunity to execute, where would it be invalid? Right, if we close back below the fair value gap that should act as a BPR. So if you want to look at that from like a 1 minute perspective, say you can't use a 30-second, okay, stop hunt. Fair value gap still. Delivery above the fair value gap. All right, you gotta wait for an order block. All right, order block's here. Gets above that, you can execute in there. This is also a pretty decent one here. It's above the open price here. So that's pretty good too. And you can keep moving up in time frame and start to see the same stuff over and over and over. Early start on the lower time frame. Gradually, the thing will continue to do that whole process as you move up in time frames. So hopefully that makes sense. A lot of you guys may not realize what I just gave to you, but you will if you go back test it. Some of you guys may know, but that's the inversion fair value gap model that I use. And it's beautiful. It looks absolutely gorgeous. It's just one of those things, just like the 2022 YouTube model. See what I mean? How we're in a premium, how it may be a little bit sketchy, right? It could stall out, dig down, try to stop these people out once more, then go, right? Just because the timing and where we're at in terms of what's happened, where we've ended up, we still have a chance for it to get up here. I do think that we will be able to get up there if this all continues. But this is a 30-second chart. Right? If we go to the 5-minute, right, we could very easily come back down here, right? We got this large wick. We'd prefer it not to do that, right? Second stage distribution. Got this wick here, so ideally we'd like to see it stay above this and the fair value gap. But, you know, from the larger grand scheme of things, if we were on the 5-minute and this is what we saw in price, right? If this was the 5-minute and not the 15-minute, and this is what we saw in price, it's totally reasonable for it to come down even to this, then look to continue to go. Right? It's something reasonable we got to consider. Of course, there's a macro coming, 736, so yeah, we will have to continue to monitor this. See if we go to the 30-second chart. Got the stop raid. Not really much of a FEG in there. Do got one in there. Okay, let's watch what this does in here. We're now in time distortion. You could see it was really rapid, and now this is when people blow their accounts by trying to push too hard. So we're going to wait for the macro, given that that is something that is potentially likely. For it to kind of just sit there and do almost nothing. Yeah, today so far, even if I was to get off and close the call right now, that's a pretty amazing morning we've had so far. Right, how do you guys feel about this morning? Let me know in the chat. See, we have bond auction, FOMC minutes, PMC. Yeah, the PM session is going to be pretty dynamic. I wouldn't be surprised though, given the fact that AM's been so aggressive. I really wouldn't be surprised if they open up with the news and they absolutely rip people's face off before they continue to go higher. Because think about it, everybody and their mama is seeing that all-time high, and they're all, you know, about to lose it, right? Like, I need to buy, I need to get in, you know? So simply opening, wicking down, using the FOMC minutes to punish that perspective. I mean, that's totally open, right? Yeah, like I said, run on stops, watch that fair value gap, overlap, ran back into it, run above this order block here, enter right once we get up above that. I'm not saying execute this, I'm saying watch this, right? This is one that I'm not pushing you to enter, just because we're still inside of this range, and I'm going to wait for the macro to come in. And this is on the 15-second, right? So remember what I said about that 15-minute. Yeah, we prefer to see it not go down much, but how we respond from this wick here, that's going to be pretty impactful. This right here was an immediate rebalance, but you could see that there's been accumulation now. This is all happening, right? Keep in mind, this is all happening inside of the area where accumulation took place before, on the left, for the market maker buy model. You see the first stage distribution here, where it accumulated on the left, it distributed on the right, going higher. This one as well. Once it leaves this, though, it should be able to leave it pretty aggressively. All right, so this is, you know, somewhat of a reason why I don't believe it needs to go down into here. But with the news and PM session, who's to say that it doesn't? Right, so because that's a risk, you we got to be extra cautious. And when we're in time distortion, we're not going to try to push it, because it could stick in this little range for, however long. But we do have the framework supporting bullishness over bearishness. Okay, so these are executions that we talked about. This order block here, that's where I entered earlier, when I showed you this inverting the 8-hour fair value gap. That's something you could have potentially considered. Stop would have had to be at least somewhere inside this fair value gap, maybe below it, right, or right at that area, because this 8-hour fair value gap was an inversion, so it held up. And then, of course, the first and best opportunity that was offered was here inside this breaker in here, right? All of which we talked about. And then I just talked about this one in here that ran 20 points. Still isn't invalidated, this move, right? So 20 points was offered there. Stop would go, somewhere inside this. Or if you wanted to be conservative, you could put it down 1-to-1. So it's pretty incredible how every single opportunity we talked about pointed to almost everything that we talked about in detail has come to fruition right before your very eyes. And hopefully, with that aside, hopefully everything that we have talked about that has played out makes sense, and you understand why those decisions were being arrived at, because that's what truly matters. All right, and of course, it working out obviously makes it important too. Mike said, "You're the best ICT teacher given." Yeah, I appreciate you saying that, Mike. I definitely try my best. And I know from the, last 6 years of watching people on YouTube and, learning on my own, within my own journey, most of these people are frauds. The same people that call ICT a fraud and say his stuff doesn't work are the same people defrauding people, selling them fake nonsense, not even proving anything at all. And then when they get called out, they back off. The last entry, finish off market maker. My model was so annoying. I thought, yeah, me too, bro. I absolutely did think that we could be able to see this blow off, because it's a second stage distribution. But again, like I said, the 15-minute chart, it does have a potential for the fair value gap down there to be reached into. Notice how the 15-minute fair value gap in here is also the low of the accumulation that we've outlined for the second stage distribution. DXY is also sideways. That is a problem, right? If DXY is not moving much, or if the bonds and yields are also stuck in consolidation, at some point you're going to see that manifest into the chart on the indices. It seems like at this current moment, after we've been ripping to the buy side and everyone's excited, the logic is now, or the algorithm's now in a mode of time distortion and holding, because everyone's trying to go 500 miles an hour, right? They're like, oh my gosh, it's buying, I'm missing a thing, I'm missing everything, oh my God, right? They're panicking, right? Trying to throw in executions. So what does algorithm do? Stops, right? Stops, it doesn't move, or it goes against it, right? Does this upset the fact that we may still end up going higher? No. The ebbs and flows of the market, it goes quick and then it slows down and stops to pull people in that are going too hard. There's a lot of people that missed, or people that took a short. right? It's now making people interested in this potentially topping out. Because remember, when there's highs that we're trading into, strong resistance, right? So there's lots of things psychologically going on. I mean, this, I guess, is a good reason to at least have a basic understanding of what the masses understand and just how the psychology is with people, because it kind of makes this make more sense, right? So yeah, again, we would have to wait and see, what's going to happen closer into the macro. 7:45, 5 minutes before the macro, we'll see if this is going to deliver us something. This macro may open up and try to target the stops from early buyers or from people that have just been buying recently. It may come down, try to stop them out, and then eventually later on, look to rip their face off to the buy side. We did set equal highs up here, so that's a good indication that we'll probably look to go up there. And aside from that, it's also a failure swing. So what did I say about that? If price is going to run out of high, preferably we'd like to see a failure swing. What have I also said this morning about high resistance and low resistance? When we're trading against the trend, in this case it'd be a retracement going to the downside, you can automatically by default classify that as potentially high resistance. Okay, does it mean that it's always going to be high resistance? No, if it's a fast moving market, right, it may be quick to retrace, quick to run through the highs again. Or most of the time though, it's going to be high resistance when you're trading against, say, a bullish trend, right? So if it's trading down to retrace, reaching down to a discount to set up further buys, if you're trading in the short direction, you got to lower your risk. This is why you lower your risk. And you keep the minimums, right? 20 to 30 points, and expect high resistance. But when price gets back in line with what it is that it's doing, narrative-wise, on the higher time frame, in this case bullish, once it shows your model and gets back in line and intermarket relationships agree and all these things start to show up, you can execute and be confident that it should be able to end up being a low resistance run, unless we're in a consolidation, right? And you're not fully seeing that it wants to break out, right? Sometimes you got to wait and let it confirm. Then look for a continuation of your model once we start to get outside of that consolidation, headed towards some logical level like this up here. Right? So again, I appreciate you guys that have that always stick with me every single week. I mean, days like this, it's like all the time, every single day in my private group. But days like this, when we're able to do it, when I'm live on YouTube, it really is a testament to the things that we do. And mind you, keep in mind, I've been calling bias and narrative for the last 9 months, almost 10 months at this point. Every single week, correct on where price is headed. Okay. And I mean, the accuracy has just been ridiculous publicly, let alone privately. Privately, it's even more insane because they see it every day. And there's a lot of them here, right? They're in the chat right now. So if I was lying or not telling the truth, they will come out and say, no, this fool's full of crap. He's not telling the truth. But I am telling the truth. So, and that's for edification for you guys to be spending your time here. Because like we talked about earlier, there's a lot of people willing to waste your time. I'm not one of them. So yeah, hopefully that is encouraging for you guys to know that you're not wasting your time. Let me see. Mike said, "I wish more people knew about," which I feel the time. Yeah, I agree. I appreciate you saying that. I just know that the more people that spend time here and give me their ear, right? Let me point some stuff out to you, right? To those people. At the very least, they will walk away from their time with us if they're in the private group, because they get a chance to be around people like Mike in the chat, like Byron, right? Some of the heavy hitters, and even a lot of the newer students like Matthew, right? Everybody in the group, everybody in the overall community, whether it's the private group or here on YouTube, you guys are all assets to this community. You're just as important as I am. I'm just pushing things onto you guys, getting you guys to get up to speed and build that skill set. But you guys are helping me do what I'm trying to do, which is help more people, and get people to really see the opportunity in the industry. So although I do, eventually believe that this channel will grow, because what I do is undeniable. But I think it's not only going to be me that's the reason. It's going to be because this community and culture that we've cultivated here, it's not one of drama, it's not one of nonsense. Okay, it's not anything that wastes your time. It's straight up like the brass tacks, like ICT says, right? Straight to the point. Lots of wisdom from pain, and proper mindset setting, and all kinds of different things. I think that, the content, how I push the content, the support that you guys give me, the support that you guys in the chat give each other, and new people that come. I think that's what's going to be the reason that this channel will grow. And again, the channel growing is not, the reason behind us wanting this to grow is not going to be because, we want to be famous or get all this notoriety. It's going to be because the larger we get, the more people we can impact, the more that I can push God on the masses as well, right? I can get people to consider trying to get closer to Him, edify Him in everything. So there's lots of different things that we're doing. And of course, if there's people that don't believe in Christianity and they have their own faith, that's fine too. Christians are not ones to forcibly shove religion down your throat. You'll come to Jesus if you choose to. By the behavior of His followers and the ones that you hear speaking His name. So it's a lot of different things that I'm trying to accomplish with this channel and content I provide. And again, like I said, you guys are a huge element to that. So as much as you guys appreciate me and want this channel to grow, I appreciate you guys too. I want it to grow. I can also edify you guys too, because most of the people that do decide to stick around for these long videos, that do decide to join me in the private group after seeing the way that I share on YouTube, or some of my students recommend me to others, just the more the more that we can grow, the more I can edify you guys, better it'll become, because the more of you that are good, it's like you could branch out, and me helping you is also helping you help others as well. So we're passing the blessing along continuously, and I just think that's a beautiful thing. Mind you, that's not something that I had initially in mind. I just thought, okay, I just want to try to do my part and help, whoever's willing to listen. And I've come to find out that, a lot of you guys are, of the same mindset. Like, you guys have a lot of the same goals. Some of you guys just want to benefit your family, and again, I encourage that. But I want you to always leave the door open for maybe you eventually trying to be that voice for somebody, to push them to succeed in this as well. I'm trying to make you guys into assets for the people around you, not only for this community, but for your loved ones, your friends, and then you can help me on the mission to try to make this industry a better industry. At least we could do our little small part in our corner of the internet, right, to try to have an impact, so yeah, again, we're kind of just in a mode of retracement. We're inside this macro, so we'll see what this wants to do. I wouldn't be surprised if this macro is what pushes us a little bit further. Again, we got equilibrium right here. Okay, so we'll see. Let me mark that out. Yeah, look, you see the 25% here from this low to that high that created that run, grading that price swing, right, from this low here up to the high up here. 25%, 50%, 75%. I think when I was grading this price, I think I pulled it down a bit further, right? Yeah. Yeah, so 25% was here. Sorry about that. 50%, 75%, and you kind of see the reaction, right? It's either going to be used as support and dynamically positioned to go higher again. Sometimes it'll result in that level being hit, right? Like one of these quadrant levels being hit, and then it acts as a resistance level for a small, short time, right? But all in all, being able to grade your price swing is very important because it highlights even further levels that are going to be dynamic in price. And then, of course, you got to monitor what price is going to do, right? Just because it hits a quadrant in your graded price swing doesn't mean it's going to, get you in line with, a run with the narrative, right? Sometimes it'll be something like this, where it'll be used to hang around it. Just know that it is dynamic. Those areas are sensitive in price. In this case, right, if I was going to get ready to take another buy, what Byron said earlier in the chat, he was talking about shorts. Byron is he's a very consistent counter trend trader, right? But obviously he's also good with the trend trading too. It's kind of like a massive fireball, this guy. But yeah, he does this all the time. I've learned over the years that when he calls some type of rejection, it's probably good to watch what happens and probably wait. This man picked a high the other day that was absolutely insane. It was insane. It was just crazy. He got like at the upper portion of it and took it down like pretty aggressively. See, look right there in the chat. He got his short. See. See? Oh man, yet again. Oh man. Byron, I'm gonna have you on one of these days to do a live with me, bro. And you need to tell me when you're gonna start a YouTube channel, bro. You gotta hop on and help me crush these idiots. But yeah, those of you that are on right now that are in the private group, I think you've heard me probably talk about Byron. But yeah, he is one of them guys. Okay, in the private group. He's a savage. So if you guys ever need any help, I'm sure he's open to answering questions if he has time. Byron, when I need more educators, I'm about to hire you, by the way. Pay you to help me. But yeah, we'll see what happens within this. Not really too overwhelmingly interested in much here. I'm not entirely sure if we're going to try to dig too much deeper. Again, we do have this 15-minute fair value gap in here. So here, let me actually remove some of this. I know somebody's gonna DM me at some point today, say, "Oh, it's too busy." Right, but a lot of the stuff, if I don't point it out, it won't be referred to by a lot of students. Yeah, I appreciate you, Byron. Yeah, we're definitely them guys, that's for sure. Yeah, you'd be surprised, Byron. It's almost every other day. Like someone's always like, oh, well, just put the fair value gap. Don't show all this and that. I just want to know the entry. Like I've gotten some like extremely ridiculous opinions. I'm just like, bro, like what? Like relax. Like my execution thing, like the one that I execute on is clean, but I gotta make sure a lot of the elements are there for some of my newer assassins in the game, right? So yeah, we now got this fractal low here. So accumulation, we could see that that's unfolding. It's kind of retracing a little bit, manipulating. So we got the 8 o'clock hour. Okay, we got the end of the 7 o'clock hour, which was in here. So we ran up. Here, let me actually clean that up. Right, so the 7 o'clock hour ran up, and we closed down below inside this 15-minute fair value gap here. So we did actually, in fact, tap that. Now we got a fractal low forming. So if we go down to the lower time frame in here, you could see consolidation, run on stops, shift. Here's an inversion fair value gap. Okay. And now, ooh, wow, we just got above that high that I pointed out right there. Okay, so now we're back. It seems like we're now back in business to continue. So now we got this up here. This high to that low should be able to be treated as a rolling balance price range. Or, if you don't want to look at it that way, you could see it as a bullish order block. Right, we'll see what happens. This reaction from this 15-minute fair value gap is pretty nice. One thing that is going against us here is the aggression with this DXY movement, you know, and we're very close to the lunch hour. Okay, so definitely monitor what happens here. It's definitely worth a study, right? But we'll see what happens given the fact that we're so close to the lunch hour. Right, if things are going to fail in terms of your model, and if it's going to not go in the direction of the narrative, getting into the lunch hour after it's been a very aggressive move, you know, it could very well lead to, you know, price stalling out or maybe trying once more to target the low. So this isn't necessarily something that I would really want to overwhelmingly consider. I do want to study how this behaves. If we can get back above this inversion fair value gap here, or reclaimed fair value gap, we have taken the stops. We'll have a shift here, order block, plus a reclaimed fair value gap, and then breaking above this high here. You know, we could look at this as a potential, like, reasonable idea to try to target this. Simply target this. We are inside of a premium. If we go from this low. Right, if you wanted to measure out from this low to that high, why that low? Why this low and not this low? I mean, you could use these lows. ICT teaches us that when we anchor our fib to get an optimal trade entry or premium discount range identifier or identification, we like to use the one that had the low that started the most aggressive move, creating the range that we're looking to measure out. So in that case, we would use this. So that puts equilibrium up here, right? DXY is moving higher. So again, this is very sketchy, right? DXY doing this so aggressive would literally be enough for me to not trust the move, right? I like to trade with the DXY in my favor. You know, sometimes when it's earlier in the session, and it, like, this is what we're expecting, sometimes this won't really sway me. But when we're later in the session going into like the lunch hour, if you guys have been paying attention to what ICT teaches, the lunch hour a lot of times presents you with, you know, chaotic reversal type of behavior or consolidation to seek some of the earlier liquidity to pair the opposing orders with what price is going to continue to do throughout the rest of the session. So in this case, buy side's been delivered aggressively for AM. So if we drop down to the sell side, that's going to have opposing liquidity. I do see this too. This is kind of interesting. Relative equal lows. This is inside of that fair value gap. So we're definitely going to watch this order block here. This one as well. So there's a 6-minute order block. What the hell didn't it? Didn't want to add that. Yeah, like I said, if we get above this, there is a chance for it to go higher. I just don't like this. Right? I don't like DXY going against us, but does that mean this won't work out? Doesn't mean it won't work out. It just means I personally won't take it. We're too close to the lunch hour. It's been so aggressive. I already called out like 4 opportunities, so I wouldn't really consider this. But, you know, the rules and things that I like to see, the things that we like to observe, the stuff that we've been talking about, you could still see the stuff playing out here. Right, here's the fair value gap, right? Run on stops. Fair value gap, inverted, broke above that high, left an order block, gets above that order block. Again, this could end up potentially being part of the model that I shared with you earlier. I got a whole balanced price delivery down here. We also are now inside this fair value gap. Right, it makes it lower probability when you see a Kraken correlation. You want a Kraken correlation for the highest of high probability with this. Breaker. Yeah, I mean, yeah, you could look at it like that too. Technically that it is Byron. Yeah, it went for that 15-minute fair value gap that we talked about, Mike. I remember when it was retracing, I said, you know, watch this 15-minute, it could go down to the fair value gap. And we went right to it. And now we got a fractal low. And then we got that whole sequence of events, creating that model that I talked to you guys about, told you about, right? So now we have an opportunity to potentially see price try to get up there a bit further. Still inside the macro here. What the hell is going on? So yeah, keep your eyes on this. Again, that Kraken correlation may cause an issue. It's definitely something that's a red flag a little bit. It may cause a problem. So again, personally, you have to make that determination. Given the risks of trading against things when the correlation is not in line, given that risk, is that something that you're willing to engage? You're not going to fully know if it is something you're willing to engage until you back test it and see what the behavior is, right? But let me tell you this, there's a reason why it's a red flag to me when I see a heavy Kraken correlation, right? But that's just me, right? You may have a different opinion, and you know, you want to be able to keep that independent thinking available for yourself. But I do believe that's worth a study. Instead of taking my word for things, when you hear me talk about stuff, you want to make sure that you go out and investigate, you know, because I could tell you everything I know, which, you know, I try my best to give you guys all the important elements. that can make you succeed, right, or do better. But again, you're gonna have to really find a lot of this stuff on your own. I can't transfer my experience and trust to you. I can share my experience with you. I can try to get you to understand a lot of these very powerful things, but again, trust comes with relationship building. You got to build that relationship with yourself, with the concepts. Just like I can't trust someone else's friend unless I become their friend too, unless I take someone's word for it. But you got to nurture the relationship with friends. So you got to do the same thing with your model, with all your different tactics. Yeah, we called all kinds of moves today. Let's put one more reminder. I forgot to send a screenshot about this. I remember when we were talking about this, we talked about the inversion fair value gap there. And of course that's an order block. You also could look at it from the 8-hour fair value gap. Again, we talked about all these things in the moment, so if you're just hopping on, I'm not just like putting a bunch of stuff on there randomly, just in hindsight. We talked about and did all this literally live. And I have a lot of people in the chat right now that would tell you that I'm lying if I'm not telling the truth. So yeah, we'll see what happens. It's definitely a more risky area to even engage. So this is a study. I'm not encouraging you to execute this. We're too close to the open. Too close to the lunch hour. The rules and stuff that we kind of discussed earlier for that model, I basically gave to you guys. We're studying how that's delivering in here. Okay. Massive move here on the Dow. It's good to see that the Dow finally woke up. Like, the Dow started the day on some BS. Remember what I said about this high up here too, right? DXY is definitely an interesting character today. Yeah, ES is just absolutely ripping. Nasdaq's kind of, we're just kind of stuck. Nasdaq ripped aggressively, but we're kind of just in a moment where prices like halted a little bit. So yeah, I think with that being said, I think we talked about a lot today, and I think it'll be okay for us to just put a ribbon on it here. Talked about many opportunities. Keep your eyes on what we've just been talking about right there as a study. I would not execute, right? But let's see if we can't get price to get up above into these highs up here later on. Bias and narrative was correct. We talked about so many things this morning, so many invaluable things that most people don't talk about. I gave you a full model, right, of execution. It's universal. It can help you also gauge turning points similar to the YouTube model, but it's not the YouTube model. It's like a different style. Similar rules, but it uses an inversion fair value gap and an order block together, right? And it's a sequence of events that takes place. So definitely watch the video. Go at the 7:30 time of the video. That's where I placed it, right at 7:30 down here for me. So go check that out, right? Review that. This is a great video to rewatch. And yeah, again, I'm really grateful for you guys' support. Thank you so much for always supporting and hopping on. You guys are amazing. Keep updating me on your progress. Keep showing up. Those of you that have been doing that have been seeing progress. And again, I'm very grateful that you give me your time, because you don't have to. Time is a currency. And for you guys to feel that it's worth giving me that currency, it keeps me humble every day, right? So yeah, with that being said, God bless you guys. Hope you have a good rest of your day. Let me know if you have any questions. We will be back again here on YouTube on Sunday. Those of you in my private group, let me know if you need any help today. Yeah, I'll see you guys in my private group in the morning tomorrow. And I will talk to you guys here on YouTube in Discord as well, in the free Discord, tomorrow morning as well. Okay? So yeah, no worries. You guys are welcome. Again, be very cautious. Don't do anything stupid. We have a lot of craziness happening later on in today. So yeah, we'll be waiting for that. All right? So yeah, I'll talk to you guys next time. Have a good rest of your day.